Hello traders, and welcome back to another video here on the Learn to Trade channel. Um, Today we're going to go through Monday's signals, the three signals that I've sent on Monday, and why did I send them, their validity, and why the DXY move was so important, right? So we're going to go all the way back to Monday. So it was March 15th, right? And this is the VIP group. If you are not part of that VIP group, then you didn't get these signals. But if you want to be part of the VIP group, there's a link below this video, right? So here are the signals that I sent you guys on the VIP group. A buy stop on the Euro US dollar, a buy stop on gold, and a buy stop on the Aussie USD. So on Monday, I was looking at the DXY. The DXY is the US dollar currency index, right? And if we go to today's, this is the forward chart. Maybe this is too high on the time frames. So we're going to go to the hourly chart, and we are going to focus on this part of price action, right? This is this week's low, and this is this week's high. So I was looking at the DXY, the US dollar currency index. I'm sorry, being capped right here by this level, the 92 level. And it's still very much being capped by that 92 level, as you can see right here. This means that currency pairs like the euro, US dollar, were being capped right here by these lows. So I was looking at the euro US dollar right here when it was trading around these highs. Actually, let me show you with this line right here. This is what I was looking at on the euro US dollar, right? The euro US dollar being rejecting those previous highs, right? And because we were looking at the US dollar currency index being capped by the 92 level, we were expecting a move down in the US dollar. A move down in the US dollar means a move up, or is bullish for the euro US dollar, right? That's why we were looking at a buy stop, and we got there. We got ticked in right here. So everything pointed out at a bullish continuation on the euro US dollar. Why? Because the US dollar was being capped by the 92 level, and we were expecting a move down. This is bullish for the euro US dollar. So the euro US dollar was trading inside of this triangle, and we got in here at the break of the previous high and the break of that triangle, right? With our first target being the previous highs, and our second targets being the ultimate triangle highs, right? So this was a slam dunk setup, also because we were trading above that weekly pivot, okay? But we got ticked in, and then we got stopped out with a small loss of 30 pips, right? This happens. We can't control everything in trading, right? We can only control the probabilities of the setups, and this setup had a high probability of success. Why? Because we were looking at the DXY being capped by the 92 level, and we were expecting this bearish continuation, right? That made for a nice long on the euro US dollar with that triangle formation, right? Even more so because we were in a midterm bullish market or bullish move, right? So that's the first signal that I sent. The second one was in gold, and this one was a success. Right here, where was it? So if we go again to the VIP group, you can see that we had the gold buy stop at the 1726.30. Gold stop, this is silver, sorry. Gold buy stop at the 17, and this is the hourly chart in gold. Right now we do have a pending order in gold, which is still very much valid. And if you are in the VIP group, you already got that signal in gold. I'm not going to say what. I'm not going to say what signal we sent, because that is for VIPs only. So we bought gold around the 17. Again, let's go to the VIP. So exactly at the 1726 level. Where was it? 1726 level. Right here. And so 1726 level. So we bought gold around this level right here, on a breakout trade from these highs, and we ended up hitting our first target at the 1735 level, 1733 level right here. And then we moved our stops to break even, and we got stopped out at break even on the rest, which was a successful trade for us in the VIP group. And the last one was a buy stop on the Aussie US dollar. Right, the buy stop on the Aussie US dollar was pretty much a slam dunk too, because it was a US dollar driven trade right here. Same rationale as before, US dollar driven, driven trade. And we were looking at a bullish continuation on, we were looking at a bullish continuation, or still looking at a bullish continuation on the Aussie US dollar, right? We got in on the breakout of, if I'm not mistaken, these highs right here, and eventually also got stopped out on a failed US dollar bearish continuation. We are still looking for that bearish continuation on the US dollar below the 92 level, and so should you right here. If buyers manage to break with this week's highs and to break with the 92 level, then our bearish rationale for the US dollar is going to change to a bullish one, right? But below the 92 level, we continue to be bearish on the US dollar, more so if we are looking at this possible triangle formation, which is a continuation or a bearish continuation pattern in the US dollar. So those were the rationales behind that those trades. We are still looking for that bearish continuation on the US dollar, like I said. And we here on Learn to Trade, we are very much transparent with our results, and losses do occur, right, in trading. The thing about trading is that it is a long-term endeavor. This is a long-term game, and you cannot be results-oriented in the sense that you cannot give up after a few losing trades. If you do that, you're never going to be profitable in the long term, right? Also, do your own analysis, right? Do your own analysis, and if a signal doesn't make sense to you, do not take it, right? That's another thing that you should be aware of. Okay, so thank you for joining me, and I'll see you guys on the next video.